Good morning, and happy Monday. Welcome to the Rick Helps Real Estate Show, and I am back from the Pacific Northwest. Got my nephew married off, hung out with a lot of family, got to experience 69 degrees and a little bit of rain. It was very relaxing, but man, I am exhausted. I could only spend so much time with that wild family. But when you're flying, make sure you get those text alerts, because it seemed to me like every airlines was facing a delay of some kind. Mine was late by 2 hours. And they kind of tell you it's mechanical, but then you start digging around, you find out they don't have enough staff. And I know it's not because pilots are staying home collecting unemployment, but there's something going on. Just every gate you went by, we're sorry, but your flight is delayed. Today, and I'm going to talk about inventory, and is it inventory that's driving prices up, or do we have a really aggressive market when it comes to people wanting to buy homes? And by the end of this live stream, you're going to understand what's really going on. Let me turn my phone off here. Today we have 7,135 homes on the market. That's the largest Monday for a long, long time. And it looks like this over here. So you can see on the 7-day moving average that sales have actually gone up just a little bit, homes under contract, but you can see at the listings on the 7-day moving average of starting to expand even a bit more. On a percentage basis, it looks like a huge number. On an actual number of homes, it's pretty tiny. So when you hear things like listings expanded by 34%, that might only be 200 homes. So you got to kind of take it with a grain of salt. Now, nationally, what we're seeing is over here, Redfin is showing days of supply, months of supply, and they're showing it at 1.1 months, which means that if no other homes come on the market, then we'll be completely out of homes in a month. But their number includes not just active listings, but homes that are under contract. When I look at ours, and I'm going to pop over here to the Cromford report, and we are sitting here at 1.1 months of supply versus the national of 1.17. And if I change it to homes that are just active and not under contract, it drops down to 0.7. So less than a month, about 2.5 weeks. So this kind of puts in perspective where we are from a supply standpoint. Yes, the number's going up, but way, way lower than it's ever been. Like here's 2014, 6 months supply. So there's a lot of work to be done. Now, to answer the question about sales, this one's interesting. There is a comment here on the Cromford report that I want to read, and I'm going to put it up there, but the print's going to be kind of small, so I'll highlight it and read through it with you. And basically it says, demand is only slightly above normal and has been getting weaker over the last several months. This is obvious both from pending and under contract counts, down compared to last month and last year, and from the monthly sales counts, down compared with last month and last year. If demand were strong, now this is a key point, if demand were strong, then all of these numbers should be responding to the increase in supply, and they are not. So what they're saying, if the demand side was strong, everybody wants a house, everybody's going out to get one, as more homes come on, they'd be gobbled up as quick as they hit the market. It's not happening. So the bidding wars and everything that you see is simply because there's not enough supply out there. I'll give you a quick example. It's not uncommon when I was doing open houses before the pandemic that you would put your open house sign up next to 3 or 4 others, and within 1 mile there would be 7 or 8 open houses at the same time. So your open house traffic was rather light. You may have 6 to 10 people show up for the course of the day because they had other homes that they could look out to when they're driving around a little 5-mile radius. Today, you hold an open house, because inventory is so low, you'll get 20 or 30 people show up. Well, those same 20, 30 people were shopping earlier in the year, but they had more houses to go, so it was more diluted. And that seems to have gone away where the open houses are really, really strong because you've got 2 to look at. So the demand seems to be lowering slightly, and they haven't been gobbling up the inventories that come on board. One more thing that they say in this report here is it says the large majority of market commentators have not grasped that demand is not the issue. Interest rates are not the issue either. Everything today is about supply. Even after the rise of almost 25%, there is nowhere near enough supply to take the stress out of the market. So you're seeing an increase of supply of 25%. Normally that would mean a lot, but when you're sitting here with 7,135 homes, that doesn't mean too much. The other interesting thing is, and I just kind of put a little chart together here, is, I get, even when I was up in Seattle, people are going, man, the market's rocking, isn't it, Rick? It's nuts. You got to see what's going on up here. And I said, well, it is and it isn't. I've never written so many contracts that didn't have, didn't get accepted in my life. But also, I'm not seeing a ton of buyers coming out of the woodwork. I'm just seeing the ones that choose to go out and want to find a home are having a hard time, and they're getting outbid because there's only one home for sale in their price point that they want. And I've also had people contact me, this looks like a really good time to get into real estate. Well, here's some stats here, and I put it on a chart. Out of these 16,295 agents in our market, that's the numbers that we track here on this channel. Out of those 16,295, 16% have only sold one home so far this year into August. 24% have sold 2 homes or less. 3 homes or less, 42%. Half of all the active real estate agents in our market area make up 52% of homes sold. Now, if this was a really brisk, vibrant market where buyers were coming out of the woodwork, those numbers would be a lot larger. You wouldn't see as many ones as you do now. So it's a hard market to break into, and it can take time to be able to get going. That doesn't mean that I'm trying to discourage you from being a real estate agent, but look at the numbers. It's tough out there. So I think that's an indicator that, that buyer traffic isn't as strong as what people say it is. And then we look at our active listings. They are going up, but they aren't going up at the rate that they were back here in July 10th. And I was feeling that we'd already be at 2020 right here. I mean, we're at November, December levels, but the trajectory of homes coming up may mean it's going to take a little longer than I thought it was for us to get to what we're going to call a balanced market, or at least the end of the bidding wars. So at the end of the bidding wars, we should be around here in these green lines. And so we really have to look and see how fast this is making its way up. Now, right about here, in the middle that you see here, we should be seeing that the waiving of appraisals and waiving of inspections starts to slow down considerably. We're starting to see a little bit of it now, but it all depends on the neighborhood and depends on the house. We've got supply increasing mostly in the 400,000 to 800,000 range. But above 1 million, supply is actually shrinking because in the summer, they don't tend to list those homes. So it's smaller. The other place where homes have really dipped are in the over 55 communities. So if you're thinking about selling in either the high end or the over 55 communities, there's nothing to pick from. So places like Sun City West, Sun Lakes, Sun City, Trilogy, and Gilbert, now's the time to put your home on the market because things are pretty slim. But I thought this was going to be clipping on a little bit faster, just based on what I was seeing here. But it is kind of going this way. So if you just draw a chart in a straight line, we're going to be tracking around 2020, but that was still pretty brisk. So there's no imminent slowdown coming as far as supply is concerned. So we need to watch this number closely. I'm hoping we end up here by October, but I think that's a bit of a pipe dream. So I don't see that happening. The interest rates have not changed. They've actually started to go down just a little bit. I think if I move us over here, let me pull this up and see what's going on. Just a minute, I lost one of my buttons here. Here we are. So let me refresh this because I don't think they've refreshed the morning data yet. So we're at 2.9 today, 2.85 yesterday, which was Friday. So they've gone up just a tick, but they look like, according to the bond markets, that they're going down a little bit today. So they're still hanging in below 3%. So we're not expecting any major changes on interest rates. In the Phoenix market, there is no more seasonality right now. Normally, listings kind of start to level off in the summertime as you start getting into the fall. and then we don't see an increase in listings until January. But the whole game has changed now, so we can't even look and say, well, here's what happened last year. It's just a mess out there. So pretty tough to try and do any trend analysis based on seasonality. So we need those listings to get up to about 11,000 before you really start to feel that the bidding wars are starting to subside. So in a couple videos I said last week, I'm saying for buyers, if you're in that 350 to 500,000 range, wait. I mean, it might be that $400,000 house now might be worth 410, but if you're bidding on a house and it's 410 and you don't have to do any appraisal gap language, and you don't have to, and you might get more concessions on inspections, then I think waiting a couple months is probably your best play. That gives you time to get your ducks in a row, figure out when you can move out of the rental that you've got right now, get ready for the down payment, get pre-qualified and get ready to hit the ground with your feet moving. And I think October may be kind of a nice little opportunity to get in. Now, there's still a lot of people out there predicting a crash. I'm not seeing any numbers that say that yet. If we're going to see a crash, we're going to see that immediate spike in inventory. Can't have a crash with low inventory. Mathematically impossible. There's been 3 crashes in the last 100 years. One was the Great Depression, but a lot of mortgages back then were actually not adjustable rate, but they were balloons. So you had a mortgage for 5 years and then it was a balloon payment. So you either had to refinance it or pay it off. Then you had the great big crash that came along in the savings and loan debacle, and that was a whole different thing. That was a change in tax policies that really made a mess. Bad lending again. 2008, that was bad lending and too much speculation. Right now, do I see any bad lending? No. Do I see a lot of speculation? Yes. See a lot of investor activities. Do I see anything coming that looks like we're going to fall off a cliff? I don't see it yet, but if I do, I'm certainly going to tell you. So take on today, Monday. Have a great week. It's good to be back home. I'll see you tomorrow morning.